Let's talk about trade now. The Chancellor of the Exchequer, Hammond, is heading to South Africa, South Korea and Japan to scout for new markets as the UK prepares to leave the European Union. Now, the trip starts in South Africa, where Mr. Hammond is due to meet officials at the Johannesburg Stock Exchange, business representatives and tech startups as well. South Africa is the continent's biggest buyer of British goods. This is the latest diplomatic push as the UK government attempts to lay the foundation for fresh bilateral trade ties. Theresa May has visited China and India since she became Prime Minister in July. And the International Trade Secretary, Liam Fox, is due to travel to Australia in early 2017. Let's figure out exactly what's in store for South Africa. Sumitra Naidu is live now in Johannesburg with a lot more on this story. Sumitra, looking at the numbers, grapes, apples, citrus fruits, these are among the key South African exports to the UK. Once Article 50 is triggered, how will the tariffs applicable to those exports from South Africa change?
Well, Rama, I think it's still really early to tell. And of course, that's the whole point of Article 50. It means negotiations for the next 2 years and probably negotiations over trade deals. So, there's mixed views on this. While some think it will be negative, there are some that are of the view that it may become a bargaining tool for South Africa, more especially when deals are renegotiated with the UK as a separate trade partner. Now, under the recently signed SADC-EU Economic Partnership Agreement, 5 SADC countries have been guaranteed duty-free and quota-free access to the European market. While South Africa joined the EPA and negotiated on behalf of the region, it doesn't get all of the same access, but under agreements already in place, it does have in the region of 86% duty-free access. And it took over a decade to get this deal to where it is. In 2015, exports from South Africa to the EU was worth $17 billion, representing around 21% of South Africa's global exports, the bulk of which is agricultural products. Close to 30% of South Africa's imports are sourced from the EU. Now, some analysts believe that agreements would stay in place as the EU-South Africa trade balance is in Europe's favor. So once Article 50 is triggered, it will take another 2 years before there's a complete UK withdrawal. We're also not sure whether the UK will be able to strike a good deal with the EU around trade. So it just seems like, lots hangs in the balance, and it's all in the negotiations.
Indeed. From the UK's perspective, though, what is it likely to lose by having to negotiate an entirely new trade deal with South Africa outside of the FTA that used to apply to it as an EU member?
Well, to put it simply, because the EU is a grouping of 27 members, there's buying and selling power there. Doing trade with the bloc often comes with discounts, preferential trade access, and of course the vast market of consumers across Europe. The UK essentially loses all of this, unless it negotiates strongly. It will have to renegotiate all of those deals with the trading bloc and may not get the preferential access to the other markets under various existing agreements. So it depends on what the UK and the EU agree upon with the 2 years after that Article 50 is enacted. So, for example, the EU is an important market for South Africa. South Africa trade is much bigger with the EU than with the UK. The UK, it accounts for just over 3% of total trade. And South Africa seems to be concentrating its efforts now on regional trade. It's not really keen on pushing aggressively to cement new agreements with the West. In this case, if deals need to be renegotiated with the UK, South Africa may actually look at how it can benefit from new deals. And that's more in line with the industrial development policy that we have, which could see tariffs and other trade barriers going up on this end, which is not good news for the UK.
Indeed. Speaking of trade barriers, the UK is also a significant source of a lot of FDI, not to mention portfolio investments that do flow into South Africa. Are there aspects of that financial services segment of trade and investment that the UK or South Africa would like to change or improve post-Brexit?
Well, the UK has for years wanted to trade more services than products, and South Africa hasn't really been a fan of trading services. Again, under the industrial policy plan that we have, efforts are being concentrated on reviving manufacturing, creating value chains for finished products. Having said that, FDI from the UK is significant. Capital constraints in the UK could also impact on South Africa to access financing from British banks, British lenders. Claims on entities in South Africa amount to around 178% of South Africa's foreign currency reserve. So it's extremely significant. This remains a concern for South Africa post-Brexit.
Indeed. We'll leave it there for the time being. Thank you for that. That's Sumitra Naidu live in Johannesburg.